Greetings, this is Jeff Scott, and this is my weekend review for May 30th, 2016. Sorry I didn't get one done last week. Actually, somebody sent me an email and asked me whether or not I would have called the big rally. And I had mixed feelings last week over the weekend, but sometimes you gotta as much react as it is anticipate. And after what we saw Monday and then Tuesday, it was pretty clear that a Memorial Day rally was in place. The question is, how long? Now, before I get started, I want to just call out some, not only is it Memorial Day for a lot of brave men and women who've served this country and continue to serve it today, but I also want to call out the passing of well, in the Jewish world, we have a term for a really wonderful person called mensch. And Ian Woodward was a mensch. He is a trader, a mentor, and a friend of mine, and he will duly be missed. He joins his wife, who passed approximately 8 or 9 months ago, and passed earlier this weekend. Ian was a great man, and I'm sure many of the folks on this call have also had the experience of spending time with Ian and of learning from him, and have made considerable amount of money, but also, I think, improved ourselves in life in general because of that relationship. He will be missed. Disclaimer, this meeting is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm not affiliated with any software vendors. Anything I use, I've paid for. And trading involves risk. You and you alone are solely responsible for any investment decisions you make. My trading really derives from 2 influences and then a couple of other sides. This is Ian here at a previous HGSI meeting, Ron Brown, and they basically took a software program that was made pretty much for them, that took much of the power of canceling, which was taught by O'Neill, and then made it electronic and made it better. Ron's been great at bringing in other influences, and there's no better teacher that I've ever met than Ian. Morales and Katcher are prior money managers for O'Neill, who built upon O'Neill's teachings with Bible gap ups, pocket pivots, etc. This is John Person. John is also a mentor and a friend, a trader, teacher, author, etc. Number of software programs as well, indicators. Most popular indicator on Thinkorswim. And these are a couple of his great books. And John is a big influence on my shorter term trading. Van Tharp, position size and money management. And then my buddy, George Lee from Canada. I own a lot of different programs. I use very few. I need TradeStation or Thinkorswim or both. Genesis is a very clean charting platform, which I like a lot, but it's expensive, and therefore I don't use it because most of the people that watch my videos are individuals and don't own it. From an analytics perspective, HGSI remains my go-to program, supplement with EdgeRater and some seasonality and some websites. For those that don't know, HGSI, this is the website, highgrowthstock.com. Despite my email address of hgsidoc@gmail.com. I do that mostly because I like the program and I've provided support, and I am a doc, but I am independent. I don't get paid for these videos by anybody, and I don't get paid by HGSI. But basically, if you go under investing strategies, you can drop down a menu and see my name and see a lot of my prior videos, and they also offer a 30-day trial with no credit card. I had a lot of questions about whether I was going to have a multi-day event this year. Since I've gone back into business, I decided that that would be a little bit challenging. So the good news is I will be participating with my friend John Person in his 3-day live meeting. When I say participating, probably 10% will be me, 90% is John, and that's the way it should be. I'm there to learn as well. It is September 24th, 25th, 26th down here in lovely Palm Beach. I will host a 1-day meeting on the 23rd. I've had about 5 people. I will be sending out a link to prior attendees and to the HGSI board If you're interested in going and don't see a link by Wednesday or Thursday, then please contact me and I'll send you the link directly. The link will just be for PayPal. Your payment will be confirmation that you're attending. And as you can see, for my one day, it's $400, including lunch, or $300 if you're attending John's seminar. Stock patterns are cyclical, and it would be really nice to have a long stage 2 or stage 4, because the problem with a market that goes choppy sideways is that it's hard to make money either long or short. It's been a long time since we've had great trends, although we have had one this year, February until recently, and maybe we're starting another one. If somebody asked me where I thought I was today, I would probably take off the top half of this, and whether this is a Darvas box and we're just starting another leg up into resistance off of support, I think that's what happened on Tuesday. We'll have to see where it goes. Right now I'm bullish. Since I'm bullish, that meant this past week I used it to lighten up on my shorts. I bought stocks and calls. I sold some puts and some bull put spreads. More put spreads than naked puts. If we look at how the market closed on Friday, you could see that dollar strength led to weakness in the foreign markets and gold. Other than that, materials also had some weakness. Energy was mixed. Financials showed some strength. Insurers were strong. Brokers were strong. Now, the interesting thing is I'm going to attribute that to a strong dollar and perhaps to rising rates. But it was a mixed picture because if rates were going up, then I might have expected REITs to be weak. And as I went through my review this week, there were a lot of positive REITs. Even some MLPs where big dividends were still in vogue. So the major markets, we had a big move. I think that's Tuesday, Wednesday, Thursday, Friday. Yeah, Tuesday, we had a big move taking out the 50-day moving average across the board, triggering new PPS daily buy signals in several. This is on the daily E-mini, NASDAQ futures, Dow futures, Russell futures. You can see the VIX continues to drop and the dollar is on a nice steady uptrend. We'll see that later and clearer. On the weekly, again, just taking a look, do I see anything that's special? Just that this 50-day moving average has held. And we're now above it on all the indexes, including the Russell. And on the monthly, clearly we've gone into a choppy period of time. This rising 50 monthly moving average has held multiple times. And until proven otherwise, we are in chop to an uptrend. Then if I want to combine this and look at daily, weekly, and monthly, the first row here or column is the NASDAQ. Is the E-minis, then the NASDAQ, then the Russell, then the NYSE, and then the Dow. And you could see we're pretty much in buy signals on daily, weekly, and monthly across the board. Now it's hard to see here, but if we just look at the weekly charts, you can see that the AD lines and the on-balance volume, AD and OBV, AD and OBV, AD, OBV, AD, OBV have all flip-flopped and now have crossed above their moving averages and are heading up. So this is a market that is not having a divergence that would suggest it's about to slow down. Now, interest rates are kind of interesting. It's kind of forming a bit of a triangle here. And it was interesting, as I said earlier, because falling rates, which are good for REITs, MLPs, utilities showed up, dividend payers, even home builders, would suggest rates are going down. But there was some strength in insurers and regional banks. I think we sort of have a shootout at the OK Corral between an improving economy, which will elevate, as well as a higher risk of higher rates coming in if things hold up. But perhaps that economy improvement will mitigate the impact of the rate rise. Interesting on the AD lines, the Russell 2000 on the left, the Russell 1000 on the right. For each of these graphs I show you, the called out graph will be in white and the spiders are in yellow. And one could notice that the S&P, the Russell 2000, the smaller caps are breaking out of a recent downtrend, and the stocks are following them. And what's interesting is the Russell 1000, here is the white, is breaking out to a multi-year high. These both portend good news for the market in the short term. How overbought are we? We look at the number of stocks above the 200-day SMA in white, as well as above the 40-day SMA. And we both moved up nicely off the bottom, but neither of which are up at the top where it would suggest that a reversal was imminent. Now, if you look at 3-month new high, new lows, again, we're back up near a 10-year high. And this one seems to be a leading indicator instead of a lagging indicator. So this suggests to me that the market may go up and retest prior highs. Buckets bounce back from bullish, so the buckets are looking at the stocks in the S&P 1500 and looking at them as individuals. Put Bollinger Bands, how many are above or below the midline. You can see we've gone from 58% below the midline to 76 above, a much more bullish stance from 1 week ago to this Friday's close. And if we look at where they are, we can see we've certainly shifted this picture here to more green and very few stocks at the bottom of the Bollinger Band. But I can tell you from prior experience, not overdone. Now that the market's returning up, I'm going to be looking closer for Hindis. The Hindis have not been occurring in ages. Now, some people might think it's because the NYSE is broken with the proliferation of bond funds and preferred shares. I did see back a couple weeks ago a Hindi on the Russell 3000, but it too is pretty quiet right now. And then you could see back here on Tuesday a line of kahunas, followed again on Wednesday with the line of kahunas, and these were from Thursday the prior week. So in a 4-day period of time, we had 3 days with lots of kahunas, and that seems to be enough to have switched this market. For those that are new to me, a kahuna is a % beat change greater than 0.24. A darker blue is 0.40, and these are one of Ian's work that showed a move in the market that was meaningful. Now, Ian also taught us about the canaries and how the canaries would give us an indication of what the market's doing, because these canaries, the Facebook, Netflix, Google, Apple, Amazon, Priceline, LinkedIn, Tesla, have been so important over the last couple of years. Now, they may have become less important now. This goes back 3 years. But you could see you had those kahunas, some pocket pivots here, a break above resistance, and everything turning green. The canaries look strong. So the question about could Amazon and Facebook resuscitate them, I think the answer is yes. And then this was a leaders that I put together in March, and despite the market coming up, the leaders still look kind of puny, and it suggests to me that we are having new leadership and not necessarily a leg down. As always, know your news and your earnings dates. Since it's the first Friday of the month, we'll have the monthly unemployment report and non-farm payrolls on Friday. On Thursday, we've got a bunch of energy, and we got some claims. We got Beige Book, ADP, PMI, so a number of things to look at this week. One thing we don't have a lot of is earnings, but if you own Workday, if you own At Home, if you own Ollie's Discount Change, Valiant Pharmaceuticals, there's a lot of things that are popular that are on the list this week. Market thoughts: we did have a big bounce early in the week to bring back the bulls. The Fed heads continue to talk a summer rate hike, while the economy appears to be improving slowly at best. Strength in dollar led to gold rolling over, and oil is holding just short of 50. On my bottoms-up review, as I mentioned before, I'm seeing strength in dividend payers, REITs and MLPs, which would suggest lower rates ahead. But then we have the interesting, I'm also seeing banks showing some strength, technology stirring. Biotech has been lagging. Some of the big boys like Biogen and Regeneron look like they're setting up at interesting buy points. ASCO, which is the large oncology news meeting, education, research, starts a week from Thursday. Actually, even back up, starts this Thursday. That will be something to see. The market meter. This is something that I do that incorporates John's work and Elder's work. Green is the Elder okay to buy. Blue is the Elder okay to buy or sell. And red is the Elder okay to sell. You shouldn't be selling on green. You shouldn't be buying on red. The buy and the sell are from John Persons. Now, I don't have the last couple of days put here, but this is about as bullish as I've seen it in a long time, where everything on the short-term dailies is buy, and for the most part, the weeklies are buys and the monthlies are in strong buys. So it looks like we had a pullback in a longer-term uptrend, and perhaps, as I said before, we continue on to threaten new highs. So usual agenda, top-down analysis, bottoms-up review, and charts of the week. We'll come back to this later because I'm basically just going to continue on a prior theme. So as I do my analysis of the market, let me show how I generate that market meter. I find it very useful to look at how it changes from day to day. So the market meter sits over here. And you notice the green and red arrows, those are John's buy-sell signs. The color of the chart, that's Alexander Elder's impulse indicator. The red dots on the above would be MACD divergence. If you see green dots below, that would suggest a MACD convergence. I'm looking for evidence of a reversal coming. So one of the problems with MACD divergence is it can go on for a long time before you pull back. And you could see that it took a couple of weeks to happen. Here was a weekly MACD divergence and a pretty deep pullback. All right, so let's take a look at some. That was Amazon, of course. Here's NASDAQ, green arrow up here. It's in a buy in all three time frames with green bars, very bullish on the NASDAQ, not up at the top of the chain. Dow Jones Industrials, green. The price bars look good. Interesting, it's in a weekly sell signal. We'll see how long it takes to switch that. Now, there's a way of knowing what the price is. It will switch over. Let's see if I can pull that up. So let's look at the price for tomorrow and see if I can see where it's 17,934. So we've got about 60 points to go in the Dow, and then the weekly will change over as well and give well, it's already turned green. I suspect it's 50 to 60 on the person buy signal as well. So, but in a buy for the most part on the Dow, on the S&P 500, triple buy, all green, very strong. IWMs, also triple green, all strong. Suffice it to say, not a whole lot to talk about here except to say that the markets look strong. Now, again, I mentioned the AD lines and the OBV. Let's just take a look at here the spiders. So a couple of things. You notice in pink that the advanced decline line on the spiders has broken above its shorter and long-term moving average. That is very, very bullish. And you'll notice during periods of time that this has happened in the past. This has been when markets have had nice runs. So it'd be interesting to see if we can get a little bit of a run here. That's big. And then the OBV, I lost it. Come back. There it is. Let's see if I can find that OBV and get the OBV back up here. Well, I'll go to the right axis, okay. There it is. I could have done that automatically. See if I can separate. I blew it again. All right. I'm not going to be even try to play. Just say the OBV is broken above as well. So exciting times here on the S&P, the NASDAQ, similar patterns, and the Russell 2000 and the Dow. So you have, again, AD lines and OBV lines trending up. This is the YM, the Dow futures. This is the Qs. Look at that big move above. The IWMs. So a lot of interesting things going on here. Positive things. Take a look at the markets. Open up, go into my weekly market view from Woodward and Brown. And we'll go to the top-down view. So this is looking at mostly performance over the last 1 day, a little bit of the last 5 days, and a little bit of the last 3 weeks. Let's take a look at the S&P 500 and see why the bulls are in control. So this would be Tuesday. So Tuesday, let's look at what happened. Tuesday, we had a big kahuna. We had a PSAR reversal. We had a MOBO breakout from a squeeze. And the daily bongo went green again. That is a very, very powerful move on the S&P 500. Let's just drop down to Plato moving averages, close that window, and you could see that the challenge we're going to have is we're going to get closer and closer to prior highs. So I guess the highs are probably up here where this line is written. So high on this day was 21.34. So we're not that far away from new highs on the S&P 500. I think this is quite bullish looking. Now, that said, this is what I don't want to see. I'm looking for spinning tops, looking for topping tails, things that would suggest that the market's had its run. Right now, I feel very bullish about the S&P. If I look at the Dow Jones Industrial, Dow Jones Industrial a little bit lagging behind the S&P, but broke above a descending trend line, broke above the 200-day moving average. It's hard not to be bullish on this one as well. The NASDAQ composite, sitting right up there at the top. Let me clear all these things off because it almost looks to me that, not perfect, but is this sort of a flag? And we're breaking out from the flag. Again, quite a ways to go to test most recent highs, but the NASDAQ looks strong. And lastly, the Russell 2000. Very similar to the NASDAQ. Kind of looks like the exact same chart. I must have drawn this a couple weeks ago. So, hard not to get excited by the indices. Let's look at the dollar. I mentioned that the dollar had moved up some with the talk of tightening. Still well below the 200-day moving average. It has broken above the descending 50, which seems to be flattening out. Notice the 17, the 8 have crossed above the 50. So the dollar looks like it's making a bit of a run, and it's broken through some of its resistance perhaps as well. So the dollar looks strong, which could ultimately be a problem for some of the stocks with big multinational components, as well as for oil if the dollar strength continues. The VIX is low, kind of down to these low rates where it gets. So when the VIX starts to move up, that's when us bulls lose money. But the VIX right now looks very complacent. And then if I look at the metals, down near the bottom, gold is heading down. Will it test the 112 range or 115 range as this 200-day moving average moves up to catch it, or will it get a bounce? Right now it looks like support's about 112, so gold has a little bit ways to go. Probably shorter term support is probably right here, which would be about 115. And if I look at silver, breaking down below the 50. Now let's just go back and look at the elder indicators on the metals, just out of curiosity. Let's just look at GC. So you could see that short term had the divergence, sell signal came in, we're now in a red sell, in a weekly a red sell, and still trying to hold on a buy on the monthly. So gold looks weak. Let's very quickly, let's look at silver. load up copper too while I'm doing this. I guess I don't have copper. I'm going to have to remember what copper is. Hold on a second. I got to remember where I've got that one. Hold on a second. That's not what I want either. All right, well, I'll worry about copper later, what the symbol is on this. So back up here. And so the point I wanted to look at here was gold looks weak, and here's silver. Kind of looks like gold. Sell signal up here, sell signal there, still in a buy on the longer term. So metals are weak and probably will remain weak if the dollar remains strong. So if you're bullish, you should start to see some stocks to buy, unless they've run too much. Drop down to the industry groups, you can see we have 171 in HGSI. With momentum up, I've got 75. With momentum down, I've got only 8. Interesting, looking at the ones that have momentum down, these were some of the ones that led off the junk off the bottom rally. Oil, metal, steel, cement, and telecom carriers, some of the things that had a move earlier this year, perhaps were rotating back into growth stocks. Let's see what the 5-day or the 2-day ups look like. Well, biotech and pharma, internet media, here's your REIT, semiconductors, e-commerce, IT, beverages, banks. So a lot of different things are made it to the top here, but certainly not the things that have been the big winners over late. For example, let's look at biotech. Don't know anything about Woodward neurosciences, but that's what came up to the top, so let's see what it shows. And let's go into my typical web view. So just so those who haven't been here before, all right, top button to our bongos, the weekly on the top, then the daily, this accumulation distribution, 13-day force, 2-day force, high jump line, and then Bible gap ups. The yellow's the squeeze, that's the MOBO. This gray line is industry group. My moving averages are always the 8-day exponential in purple, the 17 simple in green, the 50 simple in blue, the 200 simple in red. And then you have the kahunas down here, and there's not showing but pocket pivots where my arrowhead is. So here's Minerva Neurosciences, had a big move. Now in HGSI, if I want to know what happened, why it had a Bible gap up here, I'd right-click, go more info from the web, and just see what FinVis has to tell us. And notice it will open up right at the right. Positive results on depression candidate. All right. Allen and Pharmaceuticals. Obviously, it had a big move early in the week. I must have had some good volume, but you could see it's been in a long-term downtrend. Biogen, this is one of the big guys. Notice the multiple kahunas and pocket pivots. Everything is green. I mentioned to you earlier that Biogen looks strong. Let's see if it leads biotech higher. Celgene, another of the big generals, also in a long-term downtrend, way below its 200. I like Biogen better. Insight is one who's got a great pipeline. Doesn't yet make money, below the 200-day. Amgen, one of the big kahunas, really going sideways for some time. So as Chemocentrics looks pretty good, don't know anything about it, cheap stock. So Biogen, and the other one that looked really interesting to me was Regeneron. And Regeneron, you'd probably be happy with yourself if you buy it here, but it's not showing a lot of positive momentum yet. They have just an amazing pipeline of great drugs that they're bringing to market, mostly in partnerships with Sanofi and others. So biochemistry, not yet for prime time, but getting close. Might want to be nibbling. Valiant had a big move last week on the thought that it was going to be acquired, or there was talk about acquiring it, which was quickly shot down by people who know. I think the bottom line here is there's probably value that can be unlocked. The question is when. Most biotech companies that make money don't trade at a PE of 2.8. Well, I guess you have to make money to trade at a PE. But this is one that's a fallen angel that needs a lot of work for it to get better. Relipsa had some I think earnings beat or sales beat. It's got a new product that came to market, not in oncology. It had a Bible gap up and then closed at the low of the day, which you don't like to see. Big kahuna. OBV is strong, mostly green up here. Might be one to look at. I've heard $50, $60 targets on it, but I don't like how it finished on Friday. Alkermes, working up after a deep dump here. Pocket pivots last week, all green. That's not a bad looking chart. All right. As I said, these are not necessarily ones that have led up the most recent rally. Mass merchants, some of these had some big earnings numbers. Big Bible gap up on Big Lots, probably already ran. Kahuna on earnings, I believe. Dollar Tree, similar story. Dollar General. Costco sitting below the 200. None of these really look great to me. The ones that have already moved, they probably moved more than I want to touch. And you can see double-digit moves already on the leaders. Internet media. Baidu looked interesting by many fronts. You look at it. Let's go to a weekly chart first. And on a weekly chart, it pulled back to what you'd hope would be major support here. A little bit of porosity, of course. It must have been the August 24th day. On the 200-day moving average, it touched it again, broke above the 50. Bongos turn green. Makes money with some growth coming back in. Certainly a leader in the internet space. This is on the weekly. If I go back to the daily, breaking above the 50 with a kahuna and a pocket pivot, everything turning green. And I put Baidu on my watch list for this week. Twitter, I have a hard time buying this. It will get acquired someday and maybe as much as $20 or $25. But the question is when. Did have a kahuna and a nice move and a PSA reversal and a mobile breakout and a squeeze, but just a horrible downtrend unless you know something. Google also starting to look good. This is Google L. And you could see a pocket pivot, a break above the 50, still in a weekly bongo down. It's got earnings per share coming in. I think that one looks interesting as well, as does Plain Goog. And the other leader at this time is Facebook, which is below prior highs, but very close to prior highs, and one that's, I think, poised to set a new high in this quarter. Weibo broke out on news. I think they had earnings. Let's see. Congrats to those that were in this one. Except it was downgraded. Oh my God, that's back a week ago. See what the news says. My God, you can't open up anything. And you notice how they hide the X for you to close. Here it is. I forget that. I believe they had earnings come out, and that's what Weibo drove on. Next earnings are 816, very possible. Kahuna, mobile breakout from a squeeze. Looks like might be an all-time high territory, or getting close to it. I didn't look at this one. But I got to tell you, it looks kind of interesting. Very curious. Just go look at. I take these into my screener. I did look at it. And I think it's got a. This is my person indicators. This doesn't look bad here. So Weibo looks interesting. Great OBV on the daily and the weekly, and a PPS buy signal here. It went into a PPS buy signal in John's stuff back in March or February, whenever that was. So Weibo looks interesting. I mentioned before a lot of REITs look strong. We'll look at a couple of them. Here's Equinix, EQIX, great earnings per share growth. Pretty big multiple, but much less than the EPS growth, pays a 1.9%. Here's Sovereign Self-Storage, hit hard, moving up off its 200. Here's a couple of my favorites. Empire State Realty Trust, pull back, wants to move again. This might be a get on a plane buy where I could set a buy price above the red dot. Had a pocket pivot on Friday, good earnings per share growth, pays a 1.8. We'll look at the REITs I liked in my buy list in a few minutes. Semiconductor devices, as I said, they were stirring. But these are stocks that have been beaten down. Here's Micron. It's had a big move off of 10 to over 12. So 20 to 30% move. You can see industry group is strong. Everything is green. Still in a downtrend. NVIDIA, beautiful uptrend, kind of extended. The high jump bar is maxed out. So I wouldn't be chasing it here. Intel, sideways. NXP, broken out here. Pocket pivots. Everything is green. Texas Instruments also strong. So semis have some strength. E-commerce discretionary. Mentioned Alibaba. This might be a place to be looking. Baba, right below its PSAR dot. Kahuna. We looked at Baidu. This is Baba, another strong Chinese internet stock. Netflix, trying hard to get back above the 200. I wouldn't touch it till it did. It's failed here before. JD.com, I always thought this was a poor man's eBay, kind of down where it usually bounces. Perhaps it's at an interesting buy point with the Kahuna on Friday. Then Amazon, right below all-time highs, continues to go higher. Over the past year, it's got to be the strength of the market. Despite a fairly massive sell-off, believe me, I knew, because as I said before, I did make money on my puts that I had protected it with, but I actually kept my core position protected by puts through that pullback. Yowzer, would have been better off selling it and rebuying. Number 8, IT services. The first two are the result of a news of a merger, so I'm not going to skip those two. Then you get to IBM, and you almost got to wonder, is this time to get back into IBM? A couple pocket pivots, kahunas, everything is green, came out of a mobile breakout from a squeeze. Certainly a big stock, pays a 3.7% dividend. Might not be a bad place to hide if this market rolls over. Broke above its 50 weekly line here. I suspect it's had a high closed doji there. I'm just out of curiosity. Let's go back up here. And yeah, it did have a high closed doji, new PPS buy. OVV is up on the weekly, heading up on the daily. IBM looks interesting here. Again, keep in mind it is in a downtrend. Xerox, hard for me to buy Xerox, but a nice reversal there as well. So that was IT services. Beverages, typically I think of these as defensive plays. CCE, pull back to weakness. Coca-Cola Enterprises trying to mount a move with some pocket pivots, still in a downtrend bongo. I would probably leave it alone. Coca-Cola, similar. Brown-Forman. Bongos look good. Mobile breakout squeeze, pocket pivot, kahuna, all that sounds great. PSAR reversal. Still trying to get about the 200-day moving average. Sorry about that. PepsiCo, kind of sideways. And then 10th place, or banks, and I noticed you don't expect to see these things going up unless interest rates are going up. And this was sort of seemed to be opposite of REITs. This was Regions Financial. Nice move off the 7.5 up to nearly 10. Looks like it may want to lead higher. Everything green on the right. KeyCorp, similar picture. U.S. Bancorp, similar picture. And if you got to remember that on a weekly chart, these have all been hammered over a long time. Have sort of been in a sideways choppy range. You got to be careful. You could play the swings, but they're relatively narrow ranges and not easy played. So I went through this. I'm getting tired. been a long week, a long weekend. And again, such a sad time losing Ian. I found a lot of interesting stocks this weekend. So we can look at them. And the first thing that should pop out when you look over here at the right is you got a whole bunch of REITs. So let's just look at some of the ones that I liked, and I'll tell you why I liked them. American Tower Corporation, uptrend, sideways, PSA reversal, mobile breakout from a squeeze, recent kahunas, great earnings per share growth, pays a little dividend. Care Trust, pullback right below the PSA error dot, mobile breakout from a squeeze, pays a bigger dividend. Cyrus one that I called as a pick of the day back here around 38 to 40, pick of the week rather, and one that I'm still holding at all-time highs. Great earnings per share coming in, 3% dividend. Gaming and leisure, uptrend, sideways. Not necessarily yet ready to pull the trigger like the earnings, like the 6.8% dividend. Gramercy Property Trust, an IPO, run up, sideways, pays a 14.9% dividend. Independence Realty, 9.2% dividend. And then Lamar Advertising, they do a lot of the billboard signs. Nice move here. Mobile breakout squeeze, kahuna, pays a 4.6% dividend. So there were a number of these REITs that I liked. Many of these we've already looked at. On the MLP front, another big way to play dividends. I like this pattern as well. So the first thing is let's take a look at a weekly chart. And you could see this is a stock that used to be 45 that came back down a single digit. So you got to be very careful there. You notice that even with the falling stock price, it maintained its dividends. Took a dividend cut from 64 to 39%, which is bothersome. It'd be interesting to see where the dividend goes now. But someone must think something because the stocks had a big move up on the weekly, gone up 2.5 times. And on the daily, had a big move on Friday, PSA reversal, pocket pivot, kahuna, mobile breakout from a squeeze, everything is green. Pays a 10% dividend at this point, and let's see if there was some news on Friday. Well, it fell early on the results of a loss. I wonder if they said something about their dividend. This is a very bullish signal. When the stock opens up down and closes up and gives you a bullish candle signal, and a bullish engulfing candle has really engulfed really the last 10 days or so of this stock. With the kahuna and a pocket pivot, I think that this thing goes higher, like the move, dividend 10.8. Curious what they said about their dividend. All right. Now, as I said, I do bottoms up. I do a number of different things. In HGSI, I typically will put all securities here, and I'll do a couple of my favorites. One of them is to look for stocks that have pulled back to the 50 and have momentum coming in. So let's look at Carmike Cinemas. I think this might be a buyout. Yeah, forget that one. So what I'm looking for are stocks that are in an uptrend that have pulled back within 1% of the 50 that had a kahuna. Don't really care about mortgage-backed bonds. AES is underneath the 50. Let's see if I can find one that looks good. Nope, can't find one that I like this week. So let's spread it out to 2%. So this is within 1% of the 50. Let's look at 2%. Actually, let's look at Baidu. So I want uptrend. Let's go to a weekly. Is it in an uptrend? Well, it was in an uptrend. It's pulled back. It's now at the 50-day moving average with a kahuna. That's basically what I'm scanning. That's on the weekly. Here's the daily, breaking above the 50 with a pocket pivot kahuna. Everything turned green. I think that looks interesting. As I mentioned, Baidu already. Autodesk, uptrend, pull back to the 50 with a kahuna. Similar with MasterCard, uptrend, pull back to the 50, which is blue, and a kahuna. So one way of finding pullbacks and uptrends in HGSI is just to run this simple little scan and see if there's anything there that looks interesting. Another scan I like to do is to find stocks that are right below their Wilder PSAR dot, meaning that they're on the verge of a reversal, who are also squeezing. See if any of these look interesting. And I'll show you, I call this my get on a trade, plain trade. I like this stock at 60 more than I like it at 100, but this is a great looking pick. So let's just look at the weekly to show you where this thing's come from. It took off here, off of about 74, and really had a big uptrend, so it might be a little late. This is a REIT, big shocker. It grows a little bit. Their earnings per share growth are bouncing around. Pays a dividend of 3.2. The reason why I like this is, let's just make this bigger. Why do I call this my get on a plane trade? Because I travel a lot. So let's say tomorrow I'm on a train. I am on a train, and it's United, so I don't have their internet access. My train leaves at 10. It arrives at 12:50. So I'm going to miss most of the trading day. I may end up paying for internet because I don't want to miss most of the trading day. Let's say I want to buy this stock. Where would I want to buy it? I think I want to buy it if it takes out that red dot. So that PSAR dot's at 102.69. So I'm going to buy the stock at 102.75. So let me So I guess we don't have notepads anymore. It's probably over here. Never mind. All right, so we're going to buy it at 102.75. Where would I put my stop? The 50 is at 99.96. So 5% would be about 97. The bottom of this bar here was 98.19. I'm going to put my stop at the bottom of this bar at 98.15. So I'm going to have a stop at 98.15, which is my lowest bar in many. I'm going to put my buy right above that PSAR dot at 102.75. So I'm going to have 98 to 102.4. I'm going to have not much than a $4 risk on a $102 stock. Now, why do I like this? So I know that the stock's in an uptrend. That was the first question. Clearly in an uptrend. I know that it's going sideways. How do I know it's going sideways? Because it's squeezing. See the yellow? And I've looked at the chart, and I can see that I could come up with this is weekly, let me go to daily. It's supposed to be, hold on. There's the squeeze. So it's squeezing. It's right below the PSAR dot. It's gone sideways after an uptrend. It's one of my favorite trades to take. What else did we find? Texas Roadhouse. God, it looks exactly the same, doesn't it? Squeezing right below the PSAR dot. Medtronic, squeezing right below the PSAR dot. A lot of medical device companies made my list. This is also an interesting looking pattern and one that I might consider. So you notice how easy it is when you scan to find stocks that look the same way. Squeezing, mobile breakout, pocket pivot right below the PSAR dot. So that scan is working. I do most of my scanning, however, in TradeStation, where I'll show you some of the ones that I liked this weekend. But within TradeStation, I could scan for all kinds of neat things. A PPS buy 3 means it's a buy signal near pivot support. So let's look at Alibaba. We've talked about that several times. Here's your pivot support in blue, and the stock was right off of that today with a new buy signal. We looked at JD as a potential stock off its bottom with a new buy signal. So I can signal for new person buy signals. I can look for my favorite thing, which is high close doji weeklies, and there were lots of them. So let's look at one that I know will look good for you. Here's an expensive stock. That doesn't count. You'd want a high close doji, which is in orange here, to occur at the bottom of a downtrend, not in a current uptrend. C-Trip. This is a travel stock in a downtrend short term, still in a PPS sell on the weekly. Notice how OBV, how strong it is here. HCD on the daily as well. I passed on C-Trip because I didn't like the fact it was in a PPS daily sell, weekly sell, and the OBV on the daily was below the moving average. But I'm able to scan for these. So these are the ones that made it to my finals. ARAY, Accuray. Why did I like this? Similar to the last one, PPS sell, now an HCD buy, OBV is heading up, looks like a bit of a flag sitting here. I passed on this one because of this here, the PPS sell, and I passed because the daily OBV didn't look that great. Alibaba, this was a strong consideration. It's got a new daily and new weekly sell signals. OBV taken off on both of them. Alibaba looks good here. Google, mentioned it as well earlier. A high close doji and a new buy signal on the weekly. In a daily buy signal, OBV looks strong daily. Has some work to do on the weekly. I passed it because of that OBV. Biogen IDEC, here's a high close doji, OBV moving up. Here's the daily. It's already moved from 260 to 280. That's why I passed this one. I think this one goes higher. Builders First Source, I like this one a lot. Notice how the OBV is setting new highs, new PPS buy on the weekly, PPS on the sells, daily rather. I like Builders First Source. Cinemark, most of the movies made it to my list this week. High close doji, OBV breaking out. High close doji on the daily, OBV breaking out, coming out of a squeeze. This was one that I strongly considered. Here's ERX. This is a Direction 3X bull on oil. It's been in a daily buy signal for a couple of weeks. It had a hot close doji and a bounding up OBV weekly. I think this says good things about oil exploration stocks this week. ERX was twice. NGL, this was an MLP we looked at, not a high close doji this week. Did have that reversal on Friday, closing at a high. OBV is strong on daily and is strong on the weekly. Regeneron may not be ready yet, but it's close. Clear downtrend, high close doji with a new PPS buy weekly, in a PPS buy daily, also a daily high close doji. OBV's got some work to do, but it's pointing in the right direction. And we mentioned TripAdvisor, downtrend, high close doji, strong OBV on both the weekly and the daily. TripAdvisor looks like one I might take. But where I ended up with this week is where I closed last week, and that is WhiteWave. WhiteWave, I liked last week. 1, 2, 3, 4, 5. Actually, I liked it a few weeks ago, which would have been back here. You see what this date is. 2 weeks from the 16th, the 6th. All right, that's not what I wanted to hit. I wanted to hit this. Just curious what the date was of that. All right, that was the 10th. That means this is probably the 13th, 11th, 12th. Okay. I put my buy call on this one here on the 13th. So I just want to hit the 13th. And this was my stop here. Here's my buy signal. And you did get stopped out. I think it's ready to go. I would put my buy, if I close above the high on Friday, my stop's going to go here at 43.72. Let's go back to my PowerPoint. I actually did an option trade that I'm still in on this. This is why we liked it. Everything turned green. We had a Bible gap up, mobile breakout from a squeeze, pocket pivots and kahunas. If we look at it right now, we popped up, we've gone sideways, not a real lot of damage. The trading plan, here was that little bit of a flag after a high close doji. And what I'm seeing right now is I think this still looks attractive. This, to me, this line here is important. If I can close above that line, I'm going to add to my position. I did raise my stop up to 43.70. That's white wave WWAV. I still feel good about the position. It held up through whatever the market did 2 weeks ago, and I think it wants to run again. Lastly, the PUG user group, we do this monthly. I'll be leading monthly calls. We had a call with John this past week. Any information needed about this, please email me at hgsidoc@gmail.com, mostly for users of John's lifetime indicators as well as people with HGSI. But you have to have the lifetime indicator package to be participating. Again, John's seminar, 24th, 25th, and 6th of September. I'll be speaking on the 23rd and intermittently through his meeting. And hope to see you in Florida. Thanks, everybody, and have a good day. Just a quick note, next week is ASCO. There will be no recording, and then I'll be traveling the next couple of weeks. So the next time you hear from me will probably be around 4th of July. Enjoy your summers. Have a safe week, and take care.